What's up, my fellow traders? Hope you all enjoying your day. I wanted to record this video from long time, and today I decided to upload this video since it is my weekend, and over this weekend I want to give you something valuable that can impact heavily in your trading psychology. Now, if you're someone who's watching me from the different part of the world, YouTube is now given an option where you can change the language setting. If you are from Germany, you can change it to German, French, Spanish. All the language options are there. If you are watching me from India, you can change it to Hindi, and all the options you can see by clicking the settings button, and from there you can change the settings. I know that very few of you are gonna watch this video, and that percentage really shows that very few percent of the people out there are serious to make trading their own business, and there are very less percentage of the people who really want to improve their trading psychology. They just want to get a shortcut into trading by getting signal services or just by finishing any course, and they just want to become profitable as soon as possible. But the main concept and the main factor behind trading that makes you profitable, it is your trading psychology, and it is very serious topic. I normally get 1,000 to 2,000 views each video in 1 to 2 days, but you will see this video will have only few hundred views, and that is the reason they are only 5 to 10% profitable. So let's begin. If you are driving or planning to go on a long drive, listen to this video on your way to your destination. I'm sure you're going to enjoy it. Or if you are in a gym or on your treadmill, listen to this like you're listening to a podcast. Enjoy this video. I'm sure you're going to get lots of benefits throughout the video, and you're going to enjoy this video. Now, I'll try to break this video down in different sectors and try to make it as entertaining as possible by showing you the real life examples of the traders, which you can relate, and you can also relate with those examples. I'm sure you're going to relate with those examples because those are the very common mistakes you do. I'm going to show you my real-time schedule, the way I take my trades, and you can also follow that. And before I continue, it is a disclaimer here. It is not any sort of trading advice. Nothing should be taken as any sort of trading advice in this video and it is purely for educational purpose. The risk management is something, it is your own thing, and no one can teach and no one can advise you how much risk you are comfortable to take in your trading. But I'm going to show you the way I take my risk personally. So I'm going to break it down, what needs to be done in your trading if you want to become profitable, how much risk I personally take to stay consistent in my profitability, the things I have avoided in my trading to stay consistently profitable throughout last 3 years. The reason I'm saying 3 years because that is on record. I've already uploaded my last 3 years results on YouTube, and I'm going to show you those results in this video as well, at least 1 year, because we have some very good examples in those results. Feel free to verify those trades if you have time. Now let's take an example of a beginner. You heard from someone that there is a thing called trading where you can make money, which is the easiest way to make money in the world. That is true. It is easiest way to make money, but in the most difficult environment. We're going to get to that. Why is that? Now you started trading. I wanted to add one more block here, which I missed. And by the way, I will be adding this video in my course as well because it is something I wanted to just add in my course. But for the YouTube audience, it is my gift to you if you are really serious in your trading. And if you are my course member, I'm sure after you finish my course, this video will make complete sense to you. Or if you're someone who is learning from someone else and struggling to stay consistent, talking about my YouTube audience, this video will help you a lot if you listen to it without skipping a single second. So let's add one more image, which is euphoria. Now, euphoria is kind of chemical reaction, I would say, talking technically, where a trader feels excited when they go through a winning streak. Or if you're someone, like I said, who just started out in trading and you have no knowledge about trading and you just look at the market, click on buy and click on sell button, and anyway you make the money without knowing anything. That phase is called euphoria. And at that time you feel that why the hell I'm doing these jobs if it is so easy to make money in trading. That phase is called euphoria. And after a couple of days, you hit with the reality and you lose everything. And not only the beginners go through this emotion. Us traders who are profitable, who is struggling, everyone go through this euphoria phase. Now, I want to take you to an examples right here. Now we have a chart on the screen, right? We have a trading day started. I'm talking about a trader who's already trading, or if you are struggling, or if maybe you are a brand new trader. You have seen a nice uptrend, right? You have taken this trade here. Your take profit has been hit here. And then you move ahead, you look for another pullback and you have another entry condition. Your take profit is hit here. Now, when your first take profit is hit and then your second take profit is hit, your emotions, your excitements are to the moon. You feel that no one can beat you in the markets just by 2 winning trades. And you are determined to get another winner. And you started to scan the markets, just want to take another trade so badly that you can't even wait for the next day, as you have already made money right here from these 2 trades. Then you scan the market and let's say you are lucky enough to find one more trade. Let's say we have an entry right here. You enter here and then it hits your take profit. Now your excitement is to the next level. You can't believe that it is so easy to make money. Well, this is the trending market, of course. Anyone can trade trending market, but with rules. Now what happened is you have made money 1, 2, 3 in the 3 trades. Now what you want to do? You want to increase your risk. That is the biggest factor in trading that can either make you a profitable trader or it can eat all the profits which you have previously made. Now, I'm going to get to the details in a very short while. Now, after 3 winning trades, you want to enter one more trade. Let's say that is an entry condition. You have entered right here. Now, with this move down, let's say you have taken 3% of risk, 1% of risk in each trade. And here you have taken 3% of risk because you want to double your money which you have just made in previous few trades. So you have taken 3% of risk because you are so confident that if you can make this money with your strategy, then no one can stop you to make money in the next trade. You increase your risk and let's say your stop loss is hit, and whatever you made in previous 3 trades, you have lost everything. Now, the next emotion is revenge trading. Now you come back here and market is pushing up 1, 2, 3, 4, 5 green candles. Now, right here we have one more emotion called fear of missing out. Now, the market is trending higher. Now, at this point, your mind is like you want to at least make the same money which you have lose in one single trade by increasing your risk, let's say to 50%. You are so angry that on the first hand, you have made good money and then you have lost everything in the next trade. Now, you are so angry that you want to make everything back and even more profits. What you do, looking at this 1, 2, 3, 4 big green candle, you just want to capture small move and you talk to yourself, okay, let's take a small trade, go for the little scalp, and when the market move little bit higher, let's increase your risk to 50% of my account balance, and with this little move, I'm sure I'm gonna make everything which I've lost and even more. What happens is that time the market pushes up a bit and start to push down. Now at this point, you are in denial that market is gonna push up. Okay, you are in denial. You will start to move your stop losses below and below, and you are not cutting your trade, just in a fear that you're gonna lose everything whatever is left in your trading account. Now remember, you have taken 50% of your account risk, and with a single move down you have lost almost half of your account. Now the next stage is financial risk. You will add more money in your trading account because you want to make the money which you have just lost. Now your goal is just to recover your original account balance. You will forget about your profits. You put more money, you are confused. You are like, market is now gonna push down. When the market is here, what you'll do? You will sell the market. Or what you'll do? You will hedge the market. which most traders do. Then you don't know how you're going to come out of the market. First you want to buy, then you got in the sell, and then you are starting to get angry with yourself that market goes against me whatever I do. If I buy, it goes in sell. If I sell, it goes in buy. And here in the hope of recovering all the losses, you lose everything which you had before, and you lose everything which you just pumped in your account, and you will suffer financially, and you will get stressed and depressed. You just want to give up in the trading, and after a couple of weeks, because it is kind of addiction for you, you will come back and go in the circle again, lose everything, and come back and lose everything, and just donate all your money to the markets. These are the emotions most of the traders go through in their trading. Now, how to get rid of these emotions? It is very simple. Now, we are looking at impulsive versus discipline. Now, let's talk about myself here. As a professional and disciplined trader, I show you my trades every single week, and most of them are in profits. Now, let me show you the trade results of 2024. Let's do it 2023, because there we have a very good example, and I want to show you how I had been through a pain of losing streak. Now, 2023 was my best year so far, but the other years were also profitable. But in regards with the winning and losing streak, there was lots of lessons in 2023. So these are the results I've already shared in my YouTube video. Feel free to verify these trades with the times right here, with the dates, and everything is in front of you. Now I want to take you to this losing streak, which was started all the way from here. Only few winners, but here we had a losing streak. Now, anyone can get insane in these type of streak. How many trades are there? Those were 9 losing trades. Now, I'm just showing you the trades that were sent to my members. Not talking about personal trades, but these are the trades I've personally taken as well. With that, my other trades which I use with the different strategies. So just talking about the trade alerts I've sent to the members in 2023. Now, if let's say you were a member, you just joined me here. Unfortunately, if you joined me in this month, then all these trades I've sent you would be cursing me, because you have not seen the bigger picture, the winning ratio at the end of the year. That is why I say trading is not about signals. It is about learning the stuff, getting yourself trained mentally, and get independent and look at your results at the end of the month or at the end of the year overall. Now here, when my losing streak started, I had a loser here, I had a losing trade here, losing trade here, losing trade again, losing trade again, on and on. I was angry as well. I was not happy. No one can get happy by watching 3 to 4, 5 losing trades in a row. But did I give up? Or did I get insane? Yes, I was upset, but I had such a strong confidence in my trading that I knew that after this winning streak is over, I am likely going to see a winning streak as well. No one can see the future, but only your confidence, only your education which you have learned in the past trains your mind that the thing which you have learned, if that thing is profitable, then this bumpy ride cannot stop you to move ahead. Because in the past, I have tested all the pairs more than 100 times, and I've seen this type of losing streak in one single pair. So why not bear this pain in the real markets? I've been through this pain in my backtesting phase, and then I've seen that in reality, because I was familiar with this type of loss that was not unexpected. I was not fighting with the market by taking wrong trades. I was not over trading to make all the money which I've just lost in these 4 trades. Let's say I'm right here. I'm not sure what's going to happen in next 3 trades. Next 3 trades were loser again. Again, at this point, right at this trade, the last losing trade in the streak, I'm still determined that my strategies are tested. And once this phase is over, and if I am doing my proper risk management, I'm sure I'm going to come out of this loss. And I'm not looking at just few weeks of results. I'm looking at the long-term results. So here, I've been through all the emotions. I was angry, I was upset, I was a little bit stressed out. But in the back of my head, I knew that it is just a phase which is going to pass on soon. And then what do you see here? Right here, 12 winning trade just after a couple of days. before that, we have all the way from A, only one losing trade. So let's count all the way from A and let's go down till here. That is 37 winning trades in a row. Now, if you have lost your mind just here and you just want to do revenge trading at this stage, whatever left in your account, that is blown away. You don't even get a chance to look at this winning streak, the big winning streak of 37 trades in a row. I was so happy when let's say my account balance is 10,000. I was so happy to see my account grow all the way from A and let's say till here. My account is up for $4,000 and soon I've seen this losing streak. I'm back from where I have started, right here. But I was still not in the loss. I'm still above my original account balance because I have followed my risk strategy, which is 2% risk on every single trade consistently. If my risk per trade was different, let's say 1% here, 2% here, 3% here, then 1% again, 2% again, then my results won't be same. It will be random. So for the risk management, it is very important to have a same percent of risk of every single trade. If you find a very good setup and you decided to go above your risk tolerance, for example 3%, and you normally take 2%, then make sure if that is a winning trade which you have taken with 3% of risk, make sure your next trade is 1% so that you get back on track of 2% risk per trade. And then you manage your trades, that will increase your profitability. This factor is very important in your trading, that you are not touching your risk again and again. So because my risk was same, when my winning streak started, my account started to grow and it get almost double right here after couple of months, just in few months. That was in August. In 8 months, my account was doubled. And that is just with the 2% of risk. Imagine your risk tolerance is 3%. Your gains were 341%. If your risk tolerance is 5%, your gains were 990% and your account balance gone up to almost 100k. That is the live example in front of you, but it depends on your risk tolerance. Could you tolerate this risk when we had this losing streak all the way from here? Now imagine from $22,000 you've gone down to $15,000 just in couple of days. Are you able to cope with this type of loss? Ask yourself. If not, for me, 2% is fine. I'm comfortable with that. More risk, more gains, but more stress. It's totally depend on your own. That is why I said it's your own decision how much risk you can tolerate, how much loss you can see in front of you in a running trade without getting panic. So the account grows again and eventually the year end with a winner. As you can see, that was a very awesome year and we came out 173% of gain. So what have we learned here? We have learned to stay consistent in your risk. If you are taking 2% of risk, keep it 2%. If you're taking 1% of risk, keep it 1%. If you're taking 5% of risk, keep your risk 5% every single trade. How much risk you can tolerate, that is your own decision. But I've shown you the results that by keeping the same risk, only then your results will be consistent. Now, let's go to this section to trade wisely. Now, most of you who are starting out at trading, they have no schedule. They wake up whenever they want to, they pick up their phones and they start looking at the setups. That is not the way to do trading seriously. Now again, this video is for someone who want to make trading their own business and a career. Discipline is very important. Now, why discipline is very important? Now for me, let's talk about myself. I take my trades on 4 hour, right? For me, all my entries happened at the 4 hour candle close. Example is right here. This candle closes at 8:30 at this date, 8:30 p.m. means I'm already up. For me, 8:30 p.m. is fine. Now, when the candle opens at this time, it is 16:30 or 4:30 p.m. Now, I have my eyes on this candle. That if this candle closes as an engulfing candle, that is my trade. So I've looked at this candle, I've sat back, and I'm scanning the other markets to look for the same setups. In this example, I'm looking at trend following strategy, which is my pullback entry bullish. Now, I'm not discussing any strategy here, just talking about in general. I'm just looking at the trend following strategy. Here, I found this setup. Let's say this candle is not closed. I found this one, and let's say I'm looking at the other markets. Let's go look at Nasdaq. I found one more setup right here, and I'm waiting for the price to close for my entry. Now, this candle is not closed yet. Let's assume this candle is not closed yet. So I found two setups, let's say at the same time. Now I'm waiting for the price to close. I found two trades here, which could be my potential entries. So two trades, if that close as an engulfer, I've set up alarms on my phone or wherever you want to set up that after 4 hours, I'm checking the market again. I found few more setups. Let's take this candle right here. I found this candle again, and let's say I'm waiting for the close. Now I found three possible entries. These candles are closed. I've entered this trade. And now I'm not looking at my trades. I'm going to show you why. My target is to take, let's say, 5 trades in a day with 2% of risk per trade. So I found 3 setups right here, and I've entered these 3 trades. Now that all happens within 1 to 2 days, right? Now this was a winner, and this was a winner, and the other one which we have seen, the third one, is a winner. Now this week we have 3 winners already. Now when I have 3 winning trades in a row, I'm not excited. I am ready to take a next loss. Keep your mindset like this. Don't expect every other trade a winner. Every time when I enter the trade, I accept the loss first and then take profit. So I have 3 trades winner in a row. My goal is to have 5 to 6 trades in a week, and all of them are the best setups. My best strategy, market from engulfer, market is trending nicely, market is above 50 EMA on daily, and everything is going in my favor. I've done all my analysis. I've entered these 3 trades. Now, when I have 3 winning trades, and I'm trying to find 2 more trades because my goal is 5, let's say 5 trades in a week, and I'm trying to find 2 other trades, look at the market, scan the market, and let's say I didn't found any trades. What I'm supposed to do? I'm supposed to sit back. Enjoy the profits which I've already got. The mistake the traders do here, they jump back on smaller time frame and they just want to find any setups, any other setups, which could be risky as well, because now on the back of the head, they are thinking that they already have 3 winners. If they have 1 loser, it's not going to make a big difference. And with that thought, you try to find 1 more setup on a smaller time frame, and you come up with a setup which turn out to be a loser. Now, you are like, let's find another one. You force yourself to get into another trade, and you still lose another one, because here you were greedy. Why is that? Because you already have 3 winning trades. You only found 3 trades this week. Now you want to find 2 more trades forcefully, because at the start of the week your aim was to find 5 trades, but you didn't find 5 trades. Instead you found 3, but you forced yourself to find 2 other trades, and that turns out to be a loser. Now the lesson here is, when there is no setups, don't force yourself and don't get greedy. Instead, use that leverage that you have got from these 3 winning trades for next week, or maybe manage your trades to the next level of support or resistance. Get the most out of that. Trading is not about quantity, it's about quality. So make sure you pick up the best setups in your trading. Otherwise, you are not a good trader. Good trader doesn't go in the market to find setups forcefully. They look for the best setups. They get themselves prepared on the weekend. Weekend is not their holiday. Weekend is not their day off. Weekend is their working day. And if you work over the weekend, you will get the results on the weekdays. The next step is backtesting. Now this part is very important for you to listen. I always stress my students, my followers here on YouTube and everywhere, that once you learn the system, make sure you do your backtesting. Because learning the system, if you're learning from me, if you're learning from someone else, your mentor is someone else, learning that system doesn't give you profits. Instead, you might come out disappointed that now you have learned the course, why can't you make money? The answer is you have never tested the system. Now imagine you have just learned the course and you are at this state and you have this losing streak. Now, by the time you are here, you will be angry on your mentor, or maybe let's say an analyst on YouTube. You'll be angry that this guy is lying. Trading is not about profits, because you just jump on in the markets with your live money. You have never optimized your pairs. Once you learn the course, once you learn the system, you pick up every single pair or every single commodity or every single indices or stock, and you have to go back years back and make sure you are back testing like this. Till date, I still do my back testing if I found a new pair. If I want to, let's say I'm introduced with a pair, an exotic pair, I don't just start trading with that pair because I'm not sure with the results in the past 2 years of that particular pair. Go back test every single strategy. For example, if you're learning pullback entry, you're gonna backtest pullback entry 100 times, at least 100 times in the past data. If you do that with every single strategy, then you can see these type of 1, 2, 3, 4, 5, 6, 7 losers and winners in a row. You go through these type of streaks right here. For example, that was a losing streak here. Now this all is your back testing. Here, the money is not involved, but you are training your mind that when I come up in the real market, I am expected to see these type of losses. But after this losing streak is gone, you are going to see this type of winning streaks as well in the market, and overall, the results will be better. So you have already trained yourself with these type of situations. It is not stranger. It is not an alien for you. This type of streak is totally normal for you. When you want to drive a car, you go and pass your driving test. You do your practicals after you've done your theory. And in your practicals, when you drive a car on a road, you don't expect to drive smoothly. You drive for a couple of months or let's say years to get yourself familiar with the roads, humps and bumps on the roads. Then you memorize those roads. Then you know that which part of the road have those humps and bumps. You already knew, you have already gone through that route again and again. And next time when you pass through those roads, you're gonna avoid those potholes, let's say, bumps, let's say. You're gonna take a different route, let's say, because you have been through those roads for multiple years and months. And what you did, you have improved your way. You have improved your route. You have found a different route that has less humps and bumps. Trading is not different. You've been through this road before. You can expect these bumps in the market. You need to learn how to avoid these ups and downs, which is keep moving ahead by optimizing your best performing pair. So the first thing after you finish your course, from me, from someone, wherever, backtest, and backtesting doesn't take years. The good thing about mentorship, if you are learning from someone, it cuts your learning curve dramatically. You know the system, you learn the rules. Now, you need to work on your trading psychology. So, once you learn the system, backtest your pairs. Once you come up with above 50% of the results on one single pair with over 100 trades in the large sample size, you add that pair in your best performing pairs. Then pick up another pair, backtest it 100 times, put that pair in the portfolio. You found a commodity, backtest it above 100 times, put that in your portfolio. Keep on doing that and have some good, decent pairs in your portfolio. And have your rules there that I will only enter the trades on 2%. If I've tested my pair with 4 hour, I'm only going to trade with 4 hour. I'm not going to randomly jump on 15 minutes, 1 minute, 5 minutes, 4 hour a daily. Keep it same. For me, I trade mainly on 4 hour and 1 hour for some strategies. For pullback strategies, simply on 4 hour. If I go down on 1 hour, that is my counter trade strategies, which I take from the zones, for example, double tops, double bottom. Only then I go down to 1 hour. So we have back testing done. Now, what is the next step? Forward testing. Open an account with a fake money, which is called a demo account. Now in the demo account, it is same like you just coming out from the degree and you are in a learning process. You are becoming a doctor or engineer, or you just finish your driving test. It is the next step, forward testing. And that also falls in the discipline factor. Why is that? Now you have learned the system, you have done your back testing, you are ready to hit the markets because you have your pairs there. You know that these pairs perform really well with this strategy. Now, in forward testing, you open an account and you only gonna put the money you actually want to invest in the market. For example, you have $5,000 which you wanted to invest in the markets. So open an account with $5,000 of balance. You need to set up your schedule. For example, 4 hour, you're gonna look at every 4 hour candle closed, which I've just shown you, 2 a.m., 10 p.m., 2 p.m., 6 p.m., all these candles you need to see the close. You need to look for the potential entries and start setting up your trades. So rule number 1, open your account. Number 2, with a balance which you intended to invest in the real markets. Number 2, start picking up your trades from the best performing pairs. Number 3, set up your goal that you're only taking, let's say, 5 trades in one day if there is a setup. And with only 2% of risk in my case. If you are comfortable with 5%, or 3%, that's totally up to you. So make sure you have same number of risk in every single trade. Now you start to do your back testing and go through that process for at least 2 to 3 months, I would say, minimum. Then after 2 to 3 months, using the single strategy which you have learned from the course, you will come up with the results. You're looking at your 3-month results with one strategy, talking about one strategy only. Then move on to the next strategy. Back test that, repeat that, and then do a demo trades. And then combine all your strategy for the next 3 months and see the results in front of you. Now, once you come up with good results, using 1-to-1 for the beginners, I recommend 1-to-1. Once you come up with the good results, 1-to-1, then start managing your risk. Means from 1-to-1, optimize your pairs to 1.2-to-1. And then 4-to-1. Your winning ratio might fall from 50% to 40%, but your profits will increase by increasing your risk to reward ratio. That is a part of optimization. If you optimize your strategies like this, then no one can stop you to become a profitable trader. And this process can take only a couple of months, not years. Remember, you are earning your financial freedom. Earning financial freedom is not a piece of cake. You are working hard on it. You are investing your time in it so that you can enjoy your future time. If you do all this work, invest all your time going through this process, it will benefit yourself. And again, like I said, if you have a mentor, your learning curve will reduce dramatically. You already have a system. All you need to do is do the practicals by backtesting those systems. And who knows, you come up with a better system in a couple of years and you become a better trader. That happens to me. I've learned a system, then I've implemented some of my own system, my own strategies, my own rules. I came up with a better system. But it all started with learning a right education, getting a right education, learning a right system. My system is in front of you. That is 2023. 2024 was profitable as well. The results are there. 2025 is so far profitable as well. We'll see at the end of the year. So, doesn't have to be me. It can be anyone. So, rather than cursing your mentors or analysts on YouTube, but just by looking at few trades doesn't make them a good or bad analyst. It depends at the end results. So backtesting and discipline is done. Now, in trading, you're going to go through a roller coaster ride lots of time. Now, I want to show you one recent trade I've took. That was sent to the members as well this week. So I want to just talk about the recent trade right here. Now, this trade right here was an example of patience. I've entered right here. The price pushed up all the way to my take profit, almost hitting my take profit, and then pushes back down below my entry point. Now, here, you need to learn that it is normal in trading. Now, by seeing the greens, your profits, then it converted to red in a loss, it will upset you. You need to get yourself prepared for the loss before you enter the trade. And you have seen that in a backtesting process. Now, in the backtesting process, you will see lots of trades that is going in a loss and quickly push back up in a profit. Because I've seen this type of situations in the past, I don't get scared. So this factor is called a fear, which we need to eliminate from the trading. Fear is a main factor in the trading that hinder your reward to risk ratio. Here you are fearful that from the profits you are in the loss again. Now in the little profit, you just want to come out and you're relieved that you have taken a good decision. Instead, you have taken a bad decision because this was a winning trade. Yes, that could have been a losing trade, but if you do that again and again, you are only taking full losses but minimum profits. So that was a good example that you are not doing that again and again, even if you have just been through a losing streak. This trade happened to me after 3 losing trades and I was not scared. So eliminate fear from your trading. Don't reduce your profits. Keep your trade run until the price hit your stop loss or it hit your take profit. Yes, to optimize your profits, what I would have done, I would just manage my trades to these highs. At least that would have given me big profits. Now you see the power of optimizing your risk is with the 2%, I'm making maximum amount of money by going more than 1-to-1 reward to risk ratio. If I do that in few trades, my profits will be to the much better level. And the fear will only eliminate if you have taken your trade according to your risk size. If you have invested 70 to 80% of your account here to double your money, then imagine just a single move down can blow up your account and you don't even have money to survive till a stop loss. Let's say the price come down here, it hit your stop loss, not even reaches your stop loss point, and you are just out because you do not have enough money in your account. You hit with a margin call, you are out of this trade, and then the price pushes back up, hit your profits. You would be cursing yourself. That is called a bad risk management. Make sure your risk is calculated, that you can survive the moves like this before the price pushes up, or it could push down as well after, but you need to be prepared. So eliminate fear from your trading, which is very important. Now, the next thing is trust your system. Now, once you have learned the system, that is from me, that is from someone else, stop searching videos on YouTube. Stop searching the other mentors. Stop learning everything from everyone. That is called analysis paralysis. Now, talking about my experience, when I started learning trading, when I started making money, I wanted to just learn all the education in the world because it feels good when you start making money. Later on, I find out that it is not good for the mindset. You learn different system from different people, you start doing over-analysis, and then your results are random. Once you learn the system from someone, master that trading system. Stop looking at other videos. Stop looking at the other analysis in the market. Stop searching on YouTube what's going to happen with nat gas or what's going to happen with gold. For example, you have found analysis that gold is going to push up and someone just says that gold is going to push down. Or you just get a notification from your trading app that trading sentiments are bearish but your analysis are going bullish. You will get confused. You will start doubting your own system. Stop looking at so many news fundamentals out there. My trading is purely technical and it is still profitable. Technical analysis is used widely by the banks, by the institutions, run by the algos. That is why technical analysis is the best way in your trading. Yes, fundamentals are good to look at. That is for short term. Then the market goes in the same direction after some big moves happens in fundamentals. And then you have a stop loss there. If your stop loss is hit, it is hit. You are out. Like I said, if there's a big news event, reduce your risk and then go back to the same percentage of the risk. For example, you have taken 1% of risk due to news event. In the next trade, your usual risk is 2%. You increase that to 3% so that you are back on track. So that is how you can optimize your risk by following your own rules. So trust your system. Don't follow anyone else if your system has proven to be profitable system. Now I get this question a lot. How much account balance we need to start trading? Now if I say you should start trading with 1k of account balance, now this is totally your own decision. And with the 1k of account balance, you are taking, let's say 2% of risk, you are only making $20. And if you do that for next 1 year, you're not going to make big money there. So if you are someone who can't afford, there are so many prop firms there. do your research, pass the challenges if you can't afford it, and then trade with their money using your own strategies. If you're trading with 50K account balance, just by taking 2% of risk, how much money you make? $1,000 in one trade. So if you're someone who's looking to trade with $100, $200, $500, then you're not going to make much money there. And it will just mess up with your psychology. You just want to take leverages from the brokers and you want to just go full leverage. You might blow up your account again and again and again. That is why we go through all the process of back testing, of forward testing, and then trade with the live money, because when you invest your live money, you know that this is your only account. You need to grow and you have seen all the ups and downs, and you need to know the good risk management if you're investing 5K, and make sure the money you invest in the market, it is not something that you have put aside for your medical treatment or for something that is so urgent. This money must be a spare money in your trading, which is not interrupting with your life or anything emotionally in your life. If that money is involved emotionally, then you're going to do mistakes, you're going to get panic, or you're going to take bad decisions. Another question I get, when shall we quit the jobs? Learning trading doesn't mean you're going to quit your job same here. It is a full process you need to go through. After you learn your trading, make sure you have your job on your back. And that is why I recommend start with 4-hour time frame, because if you are trading on 4-hour time frame or a higher time frame, then it will not interrupt with your job. If you are working 9 to 5, then you are only looking at 4-hour candle close. You can still trade full time. If you are working night shifts, for example, like I used to do 6 p.m. to 6 a.m., you can still look at all the candles. You can only miss maybe 10 a.m. candle. Only one trade you can miss. You can still set up an alarm and wake up and look at the market and sleep, go back to sleep. So start with 4-hour time frame. Have your job there unless and until you are fully confident. And don't just rely on trading. You need to have, I'm talking about my example. I have an investment in stock. I have an investment in crypto. I make money from stock, make money from crypto. If I'm not making money, for example, I'm going through a drawdown time in my trading, I know that I have the other source of income. For example, I have my Airbnb business going on. So many things. If you are just quitting your job for trading, then trust me, you will inviting fear in your trading. Because then you will say the trading is only my hope. I have now quit my job. If I don't make money from the trading, I'm not going to survive. That is the biggest mistake the traders do. Never quit your job unless and until you are a profitable trader. Once you are a profitable trader, start investing in different sources. And once you have a good portfolio, then slowly reduce your job. Then go part-time, then go to the few days like I did. From full-time, I used to work 30 days, even 31 days in a month, 32 days in a month. The reason I'm saying 32 days in a month, because I used to work day and night, both without sleeping. 2 shifts in one day I used to do. And then slowly, I've reduced my shifts to 20 days, then to 13 days. Then I was consistent with 13 days for a couple of months, and then reduced to 5 to 6 days, and then reduced to just weekends, so that I can do my trading on the weekdays and I still have my income coming from the weekend job. And then slowly when I've built my portfolio, I say, okay, I quit. So that is the process of quitting the job, not straight away. If you quit your job just by learning one course without forward or back testing, without seeing good results, then that is a bad idea. Then trading is not for you. You will eventually quit trading. And again, if you're struggling with money, make sure find a good prop firm, pass the challenges, and earn from their money. Get your profits from them. I have no recommendations for prop firms because I've never used them, but there are some good prop firms out there. Now, finally, I want to give you a simple rule in your trading. Now, I'm talking about my system, the way I personally work. Over the weekend, I mark my support, my resistance, and in between my chart is empty. Now I have my EMA there, mainly 50 EMA, and I have 1 and 2 zones. My rule is, when the price hit my resistance, broke below, forms a condition, I sell the market, which I was already prepared, right? And then my eyes are here. Now I'm not buying the market until the price hit my level below that I've already marked, or until my price, let's say I've entered here, hit my stop loss, pushes up and broke above 50 EMA, and in that case I'll be looking at the level above instead of looking at the level below. To keep your charts very simple, it must not consist of so many lines like this, so many indicators like this that you won't even able to see the candles. So it is a recent example of crude oil in today's date that I've marked my resistance up above, sold here, and my aim was to sell this market till this level. And that happens, and on the way down the price broke below 50 EMA. I was only looking for the pullback entry bearish till here. Price forms a condition here. I just want to buy the market till the price get to this level again. And on the way up, I'm just looking for the pullback entry bullish above 50 EMA. So I have few zones, 1 EMA. Have your rule there that once it is pushing down, you are only selling below 50 EMA. Once it hits your support, you're only buying till the next level of resistance. And on the way up, you're looking for your entry condition for buy only. And opposite is true. So keep your charts clear, keep it simple, and don't rush in trades. My rule number 2 is, if I have my take profit hit once, I want to show you a recent example, which is my indices, stock indices trade, which is right here. Now, my recent example is, I had my entry in this trending market right here at this engulfer. Now, I've taken this trade. It hit my both targets. Now, here we have another pullback, even though that would be a winning trade, right? But I have avoided to take this trade because now here, when the price pushes up, it is already high in the RSI. It is already pushed up. I've already taken my profits recently. I don't enter the next trade that quick. So I skip this trade. Now, a very good example is right here. Let's say I've entered right here and we have one more pullback entry, right? I would definitely not take this because I've already got my profits right here once recently. So I avoid next pullback entry until I see a good, let's say, pullback to 50 EMA again, which will be my better entry. So make sure you are not entering the trades so quickly after getting one winning trade. Go back, take a breather, look for a best setup, a high probability winning setup. Even if then you lose, then at least you can say that you have not rushed in the trades. And after learning the strategies, don't try to implement all the strategies on every single market you see. Make sure you do your research. Make sure you know which pair performs well. Now, mainly, I'm giving you a tip here. For the pullback strategy, I have my best performing pairs. For the counter trades, like the trades from support and resistance, it normally goes well with every single market. Supply and demand zone goes with every single market. So that is why if you ask me supply and demand zone and any instrument, I'm still comfortable to take my trades in any instrument. Just talking about supply and demand zone if you know how to spot them correctly. But if I'm talking about my pullback entries or the other strategies, my pin bar strategies and the other strategies, I have my Pacific tested pair for every single strategy except these support and resistance trading system, which is also in my discretionary part of trading. That is why it is in the discretionary part, because there is no such objectivities here. There is some subjective rules which we can tweak as well. So that is a tip to you, that if you have one single strategy that is an objective strategy, make sure you backtest them. But if you're looking at just discretionary style of trading like support and resistance, then that goes with every market, but make sure you are marking them correctly. So that is a very long video, and I know that only few of you have watched this video, and I don't care, because even if 10 of you have watched this video and benefited from this video, then that is the biggest reward from me, that I can able to make difference in someone's life by giving you this video. If you have learned something out of this video, that is the biggest reward from me, that I can able to provide an education to someone who might be struggling and who might improve their trading after watching this video. So in the end, if you are interested to learn my full trading system, just go to moneymarkers.uk, and that is the only plan you want. These two plans comes free with this plan, but if you're just looking for learning the full system, that is the only plan you want, which is a lifetime plan right here. If not, that's totally cool. That is not a sales pitch, but if you're someone who's interested, then it is for you. So let's end this long video here. I hope you enjoyed it. I hope you are not bored at the end of this video. If you liked it, if you got a value, don't forget to hit a like button for me. It really helps me in a YouTube algorithm. I hope you trade green, and I'll see you guys in the next video. Till then, take care.